Okay, so let's get into this. We're doing a deep dive into this really comprehensive year-end analysis of the housing market in the London and St. Thomas area.
Right. And what's so fascinating is how 2025 was this massive reset.
A reset. It almost feels like a time warp, really. The numbers suggest the last 5 years of wild swings are basically over.
They are. We're effectively back to a pre-2021 market, both in terms of price and, I think, psychology.
And just, the data we're pulling from today, it's all official. This is straight from real estate board stats, holding true right through December 2025.
Yeah, there's no fluff here. It's the hard numbers. And they tell a really dramatic story.
We really do. So let's start with inventory. The report says there were 18,150 attempts to sell a home this year.
Which is a huge number. But here's the critical piece of that puzzle.
The success rate.
Exactly. Of those nearly 18,000 listings, only 6,525 actually sold.
Wow. So that's what, a 36% success rate?
That's it, which means almost two-thirds, 64% of homes listed did not sell. That's over 11,000 houses.
I mean, that's staggering. And when you see numbers like that, you expect prices to just fall off a cliff.
You would think so, but it was a bit more subtle than that. For the first 7 months of 2025, the average price was, remarkably stable.
It was holding steady around that $650,000 mark.
Yep, with a median price of $600,000. It wasn't until August that we really saw the market react to all those unsold homes.
And that's when the correction happened.
A steady decline, yeah. Over the last 4 months, prices dropped about 7.5%.
Which brought the average down to $605,000. And the median, that dropped $50,000 to $550,000.
And that $50,000 drop in the median price is a huge deal for new buyers trying to qualify for a mortgage.
Okay, so was this pain felt equally across the board, or was the market split?
Oh, there's a massive split. The numbers are really clear on this. The resale market, so existing homes, has basically normalized.
Right, it's sitting at about 6 months of inventory, which is actually healthy.
It's very healthy. It means buyers have choice again. You don't have that pressure, those instant bidding wars. Good homes priced well are selling at those pre-2021 prices.
So if the resale market is stable, where did the crash come from?
It's almost entirely the new construction market. I mean, that's the most dramatic change.
You mean the speculative investors?
Gone. That whole mechanism where investors would put a deposit down to flip a house before it was even built, it's just vanished.
Well, who's buying new builds now?
End users, people who actually plan to live in the home. And they're cautious. They're avoiding pre-sales, and they prefer finished spec homes.
Because they've lost confidence.
Exactly. Confidence in the builders, but also confidence they can even sell their current house to pay for the new one.
And that has to have a huge ripple effect on the economy.
It does. You're seeing employment losses.
Yeah.
Skilled trades are leaving the sector. It's setting us up for future housing supply shortages down the line.
So with all that in mind, what's the forecast for 2026? What can we expect?
Well, I think we can expect more of the same, really. 2026 is going to look a lot like 2025. This is the new normal.
A stable resale market.
For the next few years, I think so. You have to remember, interest rates are already historically low. It's not like fixed-rate mortgages have much further to fall.
But the market is still moving. It's not frozen.
Oh, absolutely not. 19 houses still sell every single day, most of them resales.
And you can see that breadth in the market. I was looking at London South and West listings. You see a 3-bed go for $549,900 in just 13 days.
Right.
But then you have a luxury home at, $3.6 million that sat on the market for 171 days. The market works. It's just selective.
And that stability isn't just in the ownership market. It's actually spilled over into rentals.
That's interesting.
Yeah, for anyone listening who rents, the market has softened a lot. It's a much better situation for tenants, mostly because of this huge influx of new purpose-built rental units that finally came online.
So to wrap it all up, the key takeaway for you listening is pretty clear. The wild speculation, the market madness, that's over.
It's gone. Stability is the new watchword.
Which brings us to a final thought to leave you with.
Right, and it's something to really consider. In a community of 500,000 people, now that we have this stability in the housing economy, what can we do with it?
Something beyond the balance sheet.
Exactly. How can we, as individuals, translate that stability into small acts of kindness and generosity to create enormous change for the most vulnerable people among us in 2026?